Hello everyone, PS from PS Invest plays here today. Nvidia stock has been skyrocketing in 2021, up 75% year to date. Has the stock peaked? Or we can expect higher stock price in 2021 and beyond. In this video, we will understand its business, its financials, its future outlook, and review its charts using Elliott wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. Nvidia Corporation, ticker NVDA. Nvidia Corporation is an American multinational technology company incorporated in Delaware and based in Santa Clara, California. It designs graphics processing units for the gaming and professional markets, as well as system-on-a-chip units for the mobile computing and automotive market. Over the last decade, Nvidia hardware has become synonymous with cutting-edge graphics and high-performance computing. Not surprisingly, shareholders have done quite well for themselves. The stock is up a whopping 1,300% in the last 5 years alone, crushing the performance of the broader market. In 1999, Nvidia invented the graphics processing unit, a GPU, a chip capable of parallelizing computing-intensive code. In other words, GPUs can handle lots of data very quickly. While these chips were originally created to render ultra-realistic video game graphics, they have since become an important part of data centers. Specifically, Nvidia GPUs have become the gold standard for accelerating workloads like analytics, artificial intelligence, and scientific computing. In fact, the company recently set records at the ML-Perf benchmarks, a series of tests designed to measure the performance of AI compute platforms. And Nvidia controls 90% of the market for supercomputer accelerators. Data center budgets were still heavily skewed towards central processing units or CPUs in 2020, with these chips comprising 83% of total spend on processors. But analysts believe that figure will drop to 40% over the next decade. In other words, by 2030, GPUs will not only be the dominant data center accelerator, they will also be the dominant processor. That's good news for Nvidia. Management puts its addressable market in the data center business at $100 billion by 2024. But that figure should be even bigger by 2030. And given the company's strong competitive position, Nvidia is well positioned to capture the lion's share of that sum. Nvidia has also expanded beyond its trademark GPU. In 2020, it completed its $7 billion acquisition of Mellanox, a company that specializes in high-performance networking solutions. Since the merger, Nvidia has introduced a new chip that incorporates Mellanox technology, the Data Processing Unit, DPU. This chip offloads networking, storage, and security tasks from CPUs, boosting performance and efficiency. More broadly, the Mellanox acquisition makes Nvidia's compute platform more robust, enabling the company to optimize workloads across computing, networking, and storage, which should drive market share gains in the data center. More recently, Nvidia announced a third chip, the Grace CPU. This processor is slated to launch in 2023 and features energy-efficient ARM cores that pack 10 times the performance of today's fastest servers. The Grace CPU will join the GPU and DPU to complete NVIDIA's compute platform. and there's reason to believe it will be a success. For the last 2 decades, CPUs built on 86 architecture, think Intel and AMD, have dominated the data center, and the pair captured 92% market share in 2020. But analysts believe that will change over the next 10 years because ARM CPUs are becoming faster and cheaper. To that end, analysts estimate that ARM and RISC-V will hold 71% market share by 2030, while 86 chips will drop to 27%. Again, this is good news for Nvidia. If this trend does indeed play out, investors should expect the Gray CPU, which is built on ARM cores, to be a key growth driver. Nvidia is now a 3-chip company, meaning its product portfolio now addresses a greater portion of data center infrastructure. And in the years ahead, Nvidia should see strong demand as GPUs become the most prevalent data center processor, and the ARM chips become the most prevalent data center CPU. That's why I think Nvidia will dominate the data center by 2030. It is still possible that the deal to buy ARM could fall through. That could be a hit to the Nvidia stock price. However, the possibility of this occurring seems less likely now. Looking at the financials for Nvidia, revenue, gross profit, EBITDA, net income, EPS, earnings per share are excellent. And when you compare the numbers with 2019, they have almost doubled. In the chart on the right, free cash flow, FCF, currently stands at $2.64 per share. This represents an amazingly high 38.1% of its Q2 revenue. In fact, this was much higher than last quarter, 27.55% of its revenue. Using this to estimate the company's FCF going forward, the average FCF margin over both quarters is basically 33%. Most companies are lucky if they can achieve that kind of FCF margin growth in 1 or 2 years, much less 1 quarter. In the chart on the left, price to earnings ratio PE currently stands at 76.17. The PE ratio is trending higher than the historical average, but it is not a concern as the company is able to grow revenue considerably quarter over quarter. I believe Nvidia stock still has more room to grow, helped by its powerful free cash flow driven by surging demand for its processors in the gaming and data center sectors, its 2 main lines of business. This is also indicative in the charts where I see the stock price to increase considerably in the next 4 to 6 years. Now, let's take a look at the charts for Nvidia. If you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Looking at the charts for Nvidia, the bull wave that started way back in 2000 is still not over. It has completed its first 2 waves of its grand supercycle, and now it is in its wave 3 of the grand supercycle. Remember, this is the strongest bull wave of Elliott wave. If we look deeper in this wave, we can clearly see that it has completed its first 4 waves and now it is in its wave 5. If we look deeper further, we can see that it has completed its first 4 waves and now it is in its final leg up of this wave, wave 5, which is typically equal to wave 1, giving us a price target of $282. When this wave is completed, I expect a retracement, which is super grand cycle wave 4, which should be a retracement of 23.6% of wave 3. giving us a price target of $192.05. There should be a strong resistance around $215 and support around $174. This, to me, would be the excellent buy range for Nvidia stock. Once this retracement is completed, I expect wave 5, the final leg up of the grand super cycle, which is wave 5, to resume, which is typically an inverse 61.8% of waves 1 to 3, giving us a price target of $390.75, which translates into a 104% profit in the next 4 to 6 years. Now, let's summarize. At current stock price, I recommend nibble any pullbacks and accumulate corrections. To me, the excellent buy range would be between $174 and $215. I would recommend to hold Nvidia for at least 4 to 6 years, as I expect a price target of $390.75, which translates into a 104% profit. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.